Hello everyone, welcome to the class. So in today class, we'll talk about very important statistical parameter to analyze and performance of a stock, which we called as a beta. So beta is a very significant parameter which we use to understand how much sensitive is the return on a stock with respect to the return on a market. If you do more fundamental analysis, there's something called CAPM model. So this in CAPM model, we use beta as very important parameter, which ultimately talks about the market risk. So here I'm not going to talk too much about fundamental analysis and its concept. So plainly, what you can understand, beta basically talks about sensitiveness of a stock with respect to the market, where if you see the performance of the market on 30th January 2024, you can see the market has fallen down by 1%. So does it mean that all the stock will fall down by 1%? If you compare some stock, if you randomly take any stock, maybe if I take ONGC, so here ONGC has actually fall by 1.31%. Coal India has fall by 2.48%. Your market has fall by 1%. Doesn't mean that all the stocks which are trading on NSE or BSE would fall by the same percentage. Probably when you're seeing the stocks, there are around 2,400 stocks which are trading in the market right now. So you can like 2,646, you can see these are the number stocks. So but out of these stocks, you can see around 1280 has actually gone up, although the market has fallen down by 1%, but around 1,300 stocks approximately has actually gone up. So the question comes, if I'm seeing the change in the market, how much can I understand that how much my stocks, wherever I have done investment, how much most probably they would have been impacted. So for that, you need to understand very important parameter in statistics, which basically talks about how much sensitive is your stock with respect to the market. And there we use something called beta. Okay, so here when we are talking about beta calculation, how will you calculate the beta? For that, what you basically need, you need return on a market, you need return on a stock, whichever stock for which you want to find the beta. Okay, and then by simply using the slow function in Excel, you can easily find the beta of the stock. Okay, talking about slow function and other formulas in statistics like covariance between stock and market by variance of a market, and other formulas of correlation regression, which most probably would have studied when you are studying statistics, or if you have not studied, then there's no problem only. But what basically you can understand, guys, that here beta basically talks about the relation between the performance of the stock with respect to the performance of a market. Here I have taken a stock called Tata Steel, and I have taken the closing price of the stock on certain dates. And on the same date, I have taken the Nifty value. Here the market means Nifty. I have taken the value of Nifty. Okay. Now the question comes, where you will get these values, like where you will get this historical data of Nifty, or where you will get the historical data of the stock price. For that, you don't have to worry anything. You just need to go to NSE website. In NSE website, suppose if you want to analyze some stock, maybe I want to analyze Bajaj Finance. Okay, for example, I want to analyze Bajaj Finance. So here I just go to Bajaj Finance and just click here. And here I just need to click on historical data. And in historical data, like maximum NSE will give you data, like historical data 1 year. Okay. If you want maybe 4 year, 5 year data, then what I'll suggest you, you can go to and Google, and here you can go for Yahoo Finance. You have to actually search for Yahoo Finance. Okay. And Yahoo Finance, you can take more historical data, while NSE will give you maximum 1 year data. So I was looking for Bajaj Finance data. So here, if I go to Yahoo Finance, so it will take a little bit time. My internet is a little bit slow, so don't get panic. So if you go inside the Yahoo Finance, here you need to type Bajaj Finance as a stock name for which you are looking for historical data, and then you need to download the data from there. Okay, so imagine if I just take the data from here, if I'm taking data from NSE. So I have just click on download. So there would be a CSV file which would get downloaded. Okay, and if I go to my downloads, I can check the data of Bajaj Finance. Yeah. So you don't have to consider all these values. What I'm looking for, only the last traded price. I'm looking for date and the last traded price. Other data are not much relevant for me. So if I want, I can delete this data. Control minus, the control space bar, shift right arrow, and I can delete this data. So I got the last traded price. This is the closing price of This is the closing price of Bajaj Finance. So you have to consider the stock for which you want to calculate the beta. I'm putting filter all DFF. Okay, you can put filter by using home, or you can go to data. So you can put filter. Okay, then just go date, sort the date from oldest to newest. Okay, fine. I've sorted my date. And then what I want, this is the closing price of the stock. So I can calculate the return on the stock, return on the stock. For calculating the return on the stock, either you can use a formula called today closing price minus yesterday closing price divide by yesterday closing price. That will give you the return. That is a one way of calculating the return. Or you can follow continuous compounding to calculate the return, that is log E, which is represented in Excel by using ln function, today closing price by yesterday closing price. Okay, you do anything, you will get the return on the stock. Okay, so just need to do double click. 1 minute. So you do whatever, either you follow compound interest or continuous compounding, you will get the return on the stock. The same way you have to find the return on the market also. So I have taken the date from 31st January 2023 to 30th January 2034. So just make sure that you take the similar date so that they should not be in confusion. So what you need to do, just go to this website of historical data. Okay, Nifty indices report slash historical data. Go to there, and you have to consider index, which is E of equity, and you have to consider Nifty 50. Okay, you have to consider an index called Nifty 50, and here search the time period. So for the year 2023, year 2023, year 2023, from 30th January 2023 to 30th January 2024. Submit, you will get the data, and then you download the CSV file. Don't do anything on CSV file because this is not actual Excel file. Okay, so avoid working on any mathematical work on CSV file. Okay, you can just copy the data and try to put on Excel. Okay. Let me just refresh it. Yeah. Fine. So this is from, again, this data would be newest to oldest. I can put filter all DFFs. That is a shortcut key to put filter. Okay, newest to oldest. I want oldest to newest. You get the data. Okay, so here you got the return on the stock. Okay, here I got the data of the NSE, that's closing price. I can calculate the return on NSE, return on Nifty. I can calculate the return on Nifty. So for return on Nifty, again, you can either follow log E, or you can follow today minus yesterday by yesterday. So you can do anything, this by this, today minus yesterday by yesterday closing price. Just do this. We'll get the return on Nifty. Fine. So once you got the return Nifty, if you want in percentage, click here. Just increase the decimal. Okay, the same thing if you want, you can do here. Control Shift down arrow. Click on percentage, increase the decimal places. Okay, so you got this date If I just copy the date, Control C, Control N, new, okay, Control V. I just copy and pasted the date here. Fine. I hope you all are happy with Excel. This is the return on the stock. Okay. I just copy this return on the stock, Control C, and there Alt ESV. I don't want formula to get copied here. This is the return on the market. So can I write here return on the market? Return on the market. Return on the market. If you have doubt why sir is using Alt ESV, Alt ESV means pay special value. Okay, so you have to understand that part. If you are not clear about that part, let me show you this. Okay, so imagine if I copy this formula and imagine if I paste it here. Okay, Control V. See this, what is happening. Forget the return part. Control Shift down arrow, Control C. Imagine if I paste it here. See what is happening. If I press F2 to see the formula. So what is taking history taking today date minus yesterday date by yesterday, because you have to understand that Excel works on relative manner. So when you are doing this calculation, guys, if you check the formula, what is doing, it is actually taking it is not based on absolute basis, it is based on relative basis. So previous cell data minus previous to previous cell data divide by previous to previous cell. That is what doing, no? So it will do the same thing here also. So that is what I'm trying to do. Copy this, Control C, come here. When you're coming here, just give me the value. Okay, don't take the formula. So go base spatial value. I hope you understood. This is return on the market. If I take the return on the stock, so you have to understand here in statistics, this is something called regression. In regression, we are talking about the sensitiveness of a dependent variable, which is dependent on some independent variable. So here the independent variable is the return on the market, and the dependent variable is the return on stock. You're getting me right? So here, if I take here the return on the market, Control C, this is the return on the market, Alt ESV. 1 minute. Just copy this, Control C. This is your return on the market. And here, just go to paste value. This is the return on the market. And what is your return on the stock? This is your return on the stock, Alt Control C and Alt ES. It's not coming properly. No problem. Control C. So go to paste value. So this is the return on the stock. Use percentage, increase the decimal. Clear everyone? Now, if you want to calculate the beta, okay, if you want to use a formula in Excel, you have to use a formula called slope. Okay, slope known Y means Y value would be your return on stock, comma, known X would be your return on the market, comma, return on the market. Control Shift down arrow. Okay, why this extra value is coming? Okay, just close bracket, enter. Okay, so this will tell you the beta on the stock. Clear everyone? So this is telling you the beta of this stock. So for this stock, the beta is 0.11. So what do you mean by 0.11? Beta is 0.11. First of all, you need to understand if a stock have a beta. Okay, if the stock has a beta, negative beta is very unreal. So the stock will have definitely will have positive beta. So positive beta means the stock will behave in the same way how the market will behave. So if your market is going up, your stock is also going up. If market is going down, your stock is also going down. If your stock is having a beta less than 1, it means your stock is a defensive stock. Means it will not react much to the movement of the market. Okay, while if your stock having beta more than 1 means your stock is an aggressive stock. So here, if you are seeing a stock having a beta 0.11 means if your market is is increasing by 10%, okay, if your market is increasing by 10%, your stock will only increase by 1.11 percentage or 1.1 percentage. Or if your market will fall down by 10%, the stock will only fall down by minus 1.1%. So normally, to understand the riskiness of the stock, how much risky is your stock, we actually look for the beta of the stock. So if the stock is having beta more than one, we consider those stock as an aggressive stock. Means the stock is very sensitive to the movement of the market. Clear? The same way, if you want, you can go to Yahoo Finance. Okay, I was telling you at that time about Yahoo Finance. So if you want, you can go to Yahoo Finance, okay, and there you can go, and here you can search for some stock, whatever stock you want, Infosys, TCS, whatever. Okay, you can search for the stock. Imagine if I search for Infi, so it is showing you NYQ, means New York Stock Exchange. Infi is showing you. I don't want New York Stock Exchange. I want National Stock Exchange. So it is trading at 1651, you can see, and you can see the beta also, beta of last 5 years. They take the Yahoo Finance, what they're doing to calculate the beta, they take last 6 year monthly data of the stock, and they're getting this value called 0.62. Okay, and imagine if you're looking for getting the historical data of this, just click on this historical data, and here you can search for the time period. If you want one last 1 year data, it is available. Okay, and you click here. Here, if I say no, I don't want last 1 year data, I'm looking for maybe last 5 year data, whatever, it's up to you. You can just see the year, whichever year you want the data, January till, yeah, till this 28th January 2022 to today. Okay, 2024. Click here, apply here, and historical data, frequency, monthly. So what these people have done, Yahoo people, they have taken in data monthly wise, last 5 year monthly data. If you want, you can do that also. It's up to you. I hope you are getting it. So then once you get this, then you just need to download this file. Once you download this file, just repeat the same assessment what I have done. Okay. So now to calculate the beta of the stock, you are looking to calculate the beta of the stock. Here you are taking the return on market, you are taking the return on stock, and you got the answer, right? So imagine if I show you the return on the market here, your return on the market, this was your Nifty value, right? Nifty value return on the market. Fine. So from 30 January to 30 January 2024. And here, if I just cross verify return on the stock, that was from 31st January. Okay. 31st January 23. And this is from 30 January, if I'm not wrong. 30 January. Okay. Let me just delete this data. Control minus. Okay. So here again, now 31st January 2023. Fine. If you see this, control shift down arrow, total 247 data are there. Here, if I see total 247 data are there, you know how to get the return. Okay, you can use LN or you can use closing price. So if I use this closing price, today closing price by yesterday closing price into 100, you got the return on Nifty. Copy this. Okay, just copy this, and here Alt ESV, Control C, and here you go to home, paste value, and here if I take the return on the stock, Control C, here go to paste value, use this formula, okay, and you will get the beta of the stock. Okay, so use this formula. So what formula you have to use to calculate the beta of the stock? Equal slope known y. Known y means your stock value, return on the stock. Copy this, and here known x. Known x would be the return on the market. Copy this, close bracket, enter. So you are getting the beta. Earlier, maybe there would be some calculation mistake. So here the beta of the stock is 1.03. Okay, the same beta, if you want, you can calculate by using data analysis table also. Okay, for that you have to go to data, and here you will find under data tab, you will find something called data analysis. Maybe you will not get first time. For that, you have to go to file and then go to options. Under options, if you go to add-ins, here, if you go to go, here you have to enable analysis toolpath and solver. If you enable this, you will find the data analysis here. Click there, and here you will find regression in data analysis. This is statistical tool. Click on regression, and here input y variable. Input where y variable would be your return on the stock. Okay, then input x variable, x range, that would be your return on the market. Okay, here levels, if you have selected column, you have to add level. Here output range, where I want output range, just select the cell where I want the output range. Suppose I want here, click just here. Wherever you want to click, you can click there. Okay, and then press OK. So if you press OK, they will show you summary statistics. Here, the value what is relevant for you is this value. This represent your beta. Clear? So because Bajaj Finance is an aggressive company, it's basically belonging to the financial sector. So the moment when I saw the beta of the stock less than 1, I understood that it may not be true. So again, I cross-verified the data. So here, if a stock is having beta, if your stock is having beta more than 1, means the stock is basically an aggressive stock. Your stock is basically an aggressive stock. Okay, means what do you mean by this? Means that if your market has went up by 10%, your stock will went up by 10.3%. Okay, if your market will fall down by 10%, then your stock will fall down by 10.3%. So that represent the beta of your stock. That represent your stock is more risky than the market. Okay, and these kind of stocks related to banking sector or FMCG, not for FMCG sector, banking sector or realty sector, okay, or maybe your mining sector. So these stocks will have beta more than 1, while maybe the stocks belonging to FMCG or pharma, their beta would be less than 1. I hope you understood this. So beta is very important fundamental tool through which we measure the sensitiveness of the stock with respect to the market. Clear, everyone? I hope you have understood this. So with this intention, I would like to wind up this class. Thank you, everyone. Bye.